Prop firms are using your trades to make profitable strategies, and most traders have no idea it's happening. In this episode, we're going to go over how using counterparty trades can build some of the most profitable strategies. We'll also go over some psychological mistakes that are probably costing you thousands every time you revenge trade, and some ways to solve it. Let's get straight into this episode. All right, so my first main topic I want to go over is a sensitive topic because I can't really provide too much proof behind it. I had a couple of calls with a couple of different prop firms back in the day where they wanted me to create algos, and they said they already had algos running that were trading against a lot of the losing traders at their prop firms. And now these aren't the SMBs or 7 Points Capital, nothing like that. These are more the prop firms that you pay X amount of dollar fee per month to be able to see if you can pass and then get funding primarily. And when you think about it, prop firms have the most valuable data in my opinion. They have the data of all the traders that are losing, so they can see what is not working, and they can also see any traders that are making abundance amount of money in that particular market regime and see potentially why. Now, some prop firms even go to the extent where they make you tell them, what their strategy is, how you're using it, what you're looking at, etc. And they do this under the cloak of saying that they need to know if they're being cheated, which is totally fair. They do need to know if some people are trying to get around their rules. That's totally fine. But this also does open up that kind of loophole to where they know a lot about your particular trading strategy. I think we'll start with you, Pedma. I think you had one story about it, and then I'll kind of route back to the Trader Dante story about it as well.
Yeah, from conversations I've had and what I've seen over the years is that flow data from exchanges, brokers, whatever is a very valuable commodity, right? Because if you have a party of people, let's say that do some financial transaction and on most times they are losing, they are net losers, that information can be very important to you, right? You can take different positions to that group of people when they become at extremes and profit from it. Over time, you'll have a few black swan events like the GME trade and others doing that, but that information is important. I had a story. I know I won't mention specific names, but I met a crypto project founder that they were trying to build a prop firm exactly for that. That they wanted to hire people, even pay them. I don't know the economical value of that, and if they were able to make it work. But they they paid people to trade a certain amount, and they would get that information to trade against them and build positions against them. My only question around that is what kind of alpha or edge do you get from that over time? But to me, that's very interesting. You are taking people that are net losers and you are betting against them. It's very interesting to me.
Yeah, like Trader Dante had a story back in the day. I think it's still on his YouTube channel where he met an individual that tracked someone that was giving online kind of stock suggestions for like entry and exits, basically. Actually, it may have not been stocks, it may have been commodities, but one of the either. And he was tracking them, and he's tracking a whole list of them. I think he had about maybe 50, maybe 10, give or sake, of people that he was tracking. And then he would see how consistent they were of losing primarily, and then he would simply take the counter trade to it. Now, this isn't going to be applicable to most people because a lot of traders don't really have any strategy or design, and maybe they aren't actually a consistent loser. Maybe they are kind of choppy. But when you find people that are consistent losers, ultimately you can flip it on its head most of the time if you're trading a liquid market, of course. And that's what this guy did, and he made a ton of money doing it. I think he made 7 or 8 figures, depending on Dante's story. And a lot of people are doing similar things where if they can find those people that are losing very consistently for whatever reason, you can take the counter trade to it, and it can work. Now, the hard thing about it is obviously most of the time sample size is going to be quite limited unless you can see a ton of online posts or they're doing online recommendations. And then secondly, you never know when it's going to stop. The person may run out of capital and stop, posting online recommendations or anything like that. So it's not a very secure strategy, but it can be a very unique strategy to at least make some money during particular times. And I think nowadays in crypto, there's so many people giving recommendations. It can be worth actually tracking someone's recommendations and seeing how consistent they are and whether they're a consistent winning or consistent loser.
You can abstract that even more. I completely agree. But for example, this could be a good segue into our HyperLiquid topic as well. When you trade against other people, we have always to consider what is our counterparty, right? If let's put this hypothetical scenario, like you are on 2021, You are seeing crypto like on UFC stages. You are seeing crypto on the news. Everybody buying crypto, like even like those late night shows on American late night shows. People there were buying NFTs, the main hosts, and showing their NFTs on the late night shows. When the entire world is on your position, it's stuck in one position or in one direction, you start wondering automatically, if you have done this for many years, if you are in a bubble or not bubble, but if you are too extended to one side. Most people lose money in these short-term trading operations. So if everyone is stuck to one side, it's not the time to be taking more risk. You want to be taking risk when everyone is away, nobody cares anymore, people are saying it's a scam and everything like that, and you have businesses that are generating revenue, that are very strong, that are robust, and you start buying those up. And it's the same exact concept of there. It's just, in my opinion, like minor version of sentiment or something. You don't want to be on the same side as everyone, and that flow, that information is one way of doing that. You get a ton of people that lose money and you bet against them. Um,
Yeah, one example I actually want to give that's happened exactly today was James Wynn. Now we actually covered
yeah,
a bit of him in the previous episode where he made about, I think it was 40 million, and at his peak he was at about 80 million in profits, and I think that was all within about a month and a bit, give or take. But recently he closed his BTC long trade for about a $50 million profit. But at its peak, I think that singular trade was around 50 million, give or take. So he had obviously gone into a significant drawdown. Now when he closed that particular trade, it was quite likely that you could see if he placed another trade very quickly against consensus, so it's like going short right after it, most likely that's going to be a revenge trade. Now you could obviously see from after that trade, on his revenge trade he lost about 16 million, and then he's now going long again, and I basically counter traded him on it. Now I don't have the proof to actually see, like, is this going to be profitable. I know the short side, so when he went short I went long. That was incredibly profitable because when he was liquidated it was about a percent move in BTC, so if you apply some leverage on that, it's a very decent profit depending on how much capital you're deploying. But those are like a real life example that you can take. Now it's very small sample size, but when you see those huge traders that are making either emotional decisions or very consistently losing recently, then it can be something you can kind of take an edge from.
yeah. For example, that James Wynn guy, I think Munir, it was around 80 million at the peak, at least from the HyperLiquid
Wow.
chart. And he's going to, like, if BTC is very extended and he has a 1 billion position, whatever, on it for a very short term trade, he's going to have to reverse it, like you said, right? He's going to have to exit. And if you can position yourself against that, you can collect that inevitable market movement that is going to cause. He can leave his position either two ways. He market orders it out of the market, or he limits, like, or TWAPs or whatever. In every case, people will be watching his wallet because everything is public on chain. And so it will going to cause some market impact. So position yourself against that when it starts getting too exposed, like too much. You start seeing him on Twitter getting a bit nervous, whatever. Might be a good way to make some profits there, short-term profits. So I see the idea there. It's
Yeah,
just not
100%.
quantifiable.
Yeah, it's an experimental trade, but I think what we tried to do is give a picture of ones that were a bit more secure, like Trader Dante's one or the Prop Firm Data one. Those are a lot more data based, and you can actually sort of find a long termer edge from that. Whereas like the James Wynn one is a very small sample for it. Another part I actually wanted to talk about this was two things. I wanted to talk about one way that I've kind of stopped revenge trading, or at least I don't really revenge trade as bad as I did, especially in my first year. I think it probably was one of my key mistakes. If I had a very big winning trade, then I was always add on the next trade, or if I had a big losing trade, then I would add even more to try and recover even more, etc. So it was just always applying in both ways. One thing, I don't know if you do, Pedma. For me, I always put all my P&L in basically percentage. Some people I know do R, whatever's within your platform, basically you can do some way to hide P&L. I think is the easiest way to remove that part of it. And also one thing I do for myself is, this might sound a bit extreme, but I show how much that trade was of a percentage of my net worth. Now, obviously, when your net worth is smaller, like I was when it's starting out, it's going to be a bigger percentage. But as you kind of grow as a trader, it's very, I don't know, it takes a lot of the emotion out of it, because I know nothing fundamentally is going to change my life because I lose this particular trade, or because this strategy has a losing day or a losing week. Nothing fundamentally is going to change. And I think that can be a very good way to reduce the emotions of it, think obviously more logically, and be able to be more pragmatic about it. And then the second thing I wanted to put was most of the time you revenge trade because you don't actually have conviction on a trade. Now, conviction can come from many places. We've talked about kind of conviction from using other people's data. You can do it from fundamental data, or you can do it from your own backtest. That's more kind of what I do. And once you have conviction, that is, I would say, 80%, maybe 90% of a strategy, because once you have it live, you have to go through the drawdowns, you have to go through holding trades that maybe you don't think personally is correct, all those sort of things. And you have to still have conviction, because often when we think about a trade, we think about it's going to be entry and exit. You just think about, hey, I'm going to enter here, and next second I'm either going to be right or wrong. Most of the time, especially if you're trading high time frames, you may have to wait weeks, days, hours, and those are the times where you can ruin a strategy and ruin a trade. So I think that's kind of where the main part of conviction comes in.
Yeah, definitely. I also look at I look at both. I look at the dollar, but I mostly look at percentage when evaluating if I'm doing things correctly. And not only that, you want to be looking at also, in my opinion, at the returns of what your benchmark is doing. Like if you are measuring against, let's say, BTC or against SPY or even against your strategy type. So I know a few trend followers in crypto that have public performances, and I go on their websites and check their performance and see if I am myself tracking it as well. And you can go even a step further and evaluate it based on like a risk-adjusted performance, because you could be doing like 2 times the benchmark return, but you could be leveraged 3 times. So it's not that great of a return. You just leverage way more. So that's a good way to focus on on your business rather than hypothetical values, dollar values. Because once you start getting like 6-figure, 7-figure P&L fluctuations, it starts becoming very hard to manage it. To think, hey, damn, today I lost a house. Yeah, damn, today I lost a Ferrari. Whatever, whatever you associate those values with. And yeah, even though I say a lot of times I make fun of the psychology type people, I make fun. When I say make fun, I say the psychology in trading, like when you are trading and stuff like that. There comes a time when you are swinging size and you have your edge and stuff like that, that it really can start bothering you, and you need to stay focused on the business of trading, not on what those dollars fluctuations mean to you.
Yeah, I'll say like one thing we both experienced was when we've had to take manual positions. I know obviously you do a bit more manual trading than me, but when we're taking more manual positions that we have fundamental or maybe discretion conviction in, they are so much more taxing to hold. Like I don't really think about my automated strategies on a daily basis, or at least not on an hourly basis as well. Maybe I'll check up on them every couple of hours. But when we were in a significant high position, I know obviously you are still. I was checking it every 30 minutes, every 10 minutes. Like that, it becomes mentally taxing, and you have to be very good at distracting yourself, removing it out, and then trying to be productive on top of that it can be very difficult. Did you ever find like a solution to it? Because I know you've been holding this position for a while, so I don't know kind of how you think about it.
No, never did.
Yeah, it's just tough when you're holding a significant portion. You obviously there's such a big outcome that can happen either way, so your brain just kind
Yeah,
of automatically thinks about it.
I see people say, oh, you have to control your emotion, whatever. It's because they never swung any significant size to them, you know. Yeah, I'm controlled most of the times. I don't make the mistakes most of the times. Again, I'm not perfect, but that comes with experience and like and trying to think long term. And also, yeah, I'm not going to get into that, but even recently on the HyperLiquid trade, it's no secret that I hold a very large position in it because I got the airdrop. I sold 2/3. I added even more at the bottom, and I'm now holding like just so that the audience can understand. Like I'm holding like 50% of more portfolios now on HyperLiquid, and there has been some nice volatility over the last few days on the upside, but that position is very large, and I'm not going to lie when I say that I don't check it every once in a while. I still check it. I still open my phone, and maybe that's a signal to sell. But I have a more how can I say it? I have a more thought through like a theory, a thesis for this trade. It's not like I'm just randomly gambling, but what I want to say is that I still check it. Even after all these years, I still check the positions when they become too large.
Yeah. Would you more? I kind of was thinking about this recently. Would you more classify that as like an investment rather than like a trade?
Yeah, I would say it's more like a value trade because yeah, because the pure idea behind the trade is around like its fundamentals, right? I believe it
Yeah.
should be priced somewhere, and I believe that it's mispriced even today. And I'm just holding until it gets fairly close to pricing, and I sell it. That's it.
Yeah. Well, one sort of side tangent. I've never actually had this tangent online, so I kind of want to get it out. But one thing I really mistook from my trading journey and just overall making money journey, I guess, whatever you're doing, side hobbies, etc., is in your brain. You think when you take an action, how do I put this simply? Your brain kind of always cuts out the middle part. Every time I thought about it, especially when I was getting into trading, I thought it would be I unlock something or I do something, and then boom, when it starts to work, then my ultimate outcome is going to happen. Let's say that outcome is have $1 million. Your brain never accounts for that weird middle part where you're doing everything correctly. It's working, but it's just time now. It's just a huge time element, and that has probably been one of the hardest things, at least recently, that I've had to go through. Is just because I know I'm doing everything right. I'm putting good capital in my strategies. I'm doing well on every other part of it, but ultimately it's still just a time element. I'm not going to shoot up to 1 million tomorrow or next couple of weeks or whatever. And a lot of time your brain can kind of force you to make dumb decisions trying to get that outcome even faster. And well, that's why I did a tweet ages ago about it, saying that having patience can often lead to your outcome faster because you stop getting in your way with trying to do things the most efficient way, or a way that could maybe get you there faster, but you're taking on double the risk or things like that. So for anyone that is in the journey, just be very happy that it's probably going to take you like 2 to 4 times longer, even if things are working out correctly. I think a lot of time when you see online people say, oh, they went from, five-figure account to seven figures within a year and a half. That is really difficult to do. Like really difficult to do. You have to get somewhat lucky on a position or some sort of market regime that you encountered. At least from my current journey, it's probably going to take me another year to 2 years if I kind of continue the same outlook to hit like a full million liquid, and actually like trading it all. So, have you experienced the same thing, Padma, or did you never have that kind of issue where you thought it would happen kind of fast?
Yeah, early on I did, but over the years I've completely eliminated it. Um, that's one thing that I can say confidently is that I don't have the urge to like overbet. You know, I
Mm-hmm.
can I can take some irresponsible positioning and here and there, but it's never to the point. Oh, I could blow up my account here because I'm trying to like double my account. No, over the years I've survived many markets. I've been through 2018 in equities. I've been to 2020. I've been to 2022. Like I've been, I survived many regimes, and one of the things that I can say that is very important is that you survive long enough so that you can hit that one big trade or that one big cycle, whatever it is for you, and that's where most of the money comes from. You can even check stories like, I don't know, from Duncan Miller and others. Like they all have stories about a few big trades in their careers, and that's because they were able to survive until then. And yeah, you just got to survive. Sure, there are stories from people turning a few thousand into millions in one cycle or whatever. But trust me, those people either lost it all or the very few that got lucky and got out at the time, they are not doing this job at that level anymore. They are not consistent. They just got lucky one cycle, and good for them. I'm not criticizing, but that's not a way to make this into a professional career, in my opinion.
Yeah, 100%. And one thing people don't think about is sometimes they think about, oh, I wish I just got lucky and was able to make that sort of amount of money. If you do get lucky, then your biggest thing that you have to re-encounter is realizing it was pure luck and you had like no control over it. Especially if you kind of got lucky in like one regime. Like I think there was that Twitter post from Gainsey, I think his name is, and
Yeah.
like obviously he's still done well for himself. I think he's still seven figures, but he was I think eight or maybe mid eight or whatever, and he drew down a lot because he thought it would never stop. He thought he could keep on putting huge positions on that were just going to keep on going up. And at some point, that regime changes. And if you haven't learned the lesson from taking painful losses and things like that, or from slowly accumulating your account and not just getting lucky with one position, that can be a very hard lesson to accept. That it's time, like you can't just put money in and they get printed out like $10 for every dollar.
from the way he talked about it, to be honest, I don't think he's even at seven figures. To be honest with you, I would bet good money that he's not at seven figures. And this is not me mocking, it's not. But he said something very interesting at the end. What did he say? It's like, once you make money as a degenerate, it's really hard to take the degenerate out of you. And I
It's such
think,
a good quote.
yeah, it's like it's very simple, but it's so true.
Yeah, it is very true because like in a weird way, because I haven't made money in a degenerate way, I wouldn't have that issue. But now I have a very slow journey. But it's it's kind of like the classic thing. The grass is never fully greener on the other side. Like it might seem cool that someone was able to make a ton of money really fast, but ultimately, if you play out their story long enough, they'll maybe make a mistake, and if they don't, then they've played the game really well.
I don't, yeah, no, I completely agree. Like, because these people, there's a lot of stories. I know people that made a lot of money during 2021 and 2020 in crypto. I wish I was here during that time. But most of those people are not around anymore, at least not at the level that they once were. And even those people that you value and like, even those, they don't tell you that they lost a lot of money because it's natural in the games. Market is not like a business that you are making a steady income every month or every quarter. You are going up, you're going up down a lot, and hopefully in a few years you are up from where you are today.
Yeah, 100%. Do you want to go over either outlook or counter seasonality?
Let's go into the outlook and counter. I think we can, yeah, I think we can go into both because it's
Sure,
merged.
sure.
So in terms of the outlook, like now we're talking about this HyperLiquid trade that I currently have on, and I would love to document this here. My idea for HyperLiquid is this is a project that is generating like almost $1 billion revenue, which is very high. One of the chains that is generating most revenue right now. There's no, for me personally, this is not investment advice. There's no reason why this shouldn't be higher. Now, if we take a step further, if you take a step higher and we'll overlook at the macro perspective, in my opinion, there's a lot of good things that are going to that are realizing themselves. Let's say into 2026, you already had this very pro crypto administration. You had right now in the start of the year like a lot of volatility, turmoil because of the tariffs and stuff like that. All of that stuff is getting reversed. Plus, you have the midterms in 2026. And the midterms, I think, play a key role in markets because one of the things that Americans love more than whatever their politics, their football teams, wherever, is money, right? And every American is invested into their retirement, into the stock market. So if you are going to go into, if this Trump administration goes into 2026 with like a kind of wild man approach, like taking huge risks, like on the market and the market's crashing and stuff like that, you are going to lose the house. It's already low odds that they keep the house, from what I understand, at the majority that they hold. And if they go into 2026 like that, playing with people's money on the stock market, they are not going to be very popular. And you see this on the polls already. Trump popularity decreased a lot. And yeah, my outlook into 2026 is that he can't no longer take like massive risks that will add a lot of volatility to the market unless he doesn't care about winning the midterms. And my idea is that into 2026, now the summer should be a bit slower, at least historically it has been. But once you get to Q4 and stuff like that, the market will, a lot of positive headlines will be forced into the market, in my opinion. What do you think, Manir?
Yeah, I'll preference it again that most of these conversations where we have about general market, I'm really just kind of guessing, giving my opinion from my experience. But to give it actually a small recap, because I don't think we've ever really bragged about it, but we did really good on the Trump tariff one, where I think SPY went down about 20% from whenever we were doing a podcast episode. We talked about it at around 493, and we were saying this is probably going to rebound. Like this is a crazy overextended move in such a short period of time. And now I think we're back at like 580 give or take. And we recently just had news again about the tariffs that he was going to put on EU, and then he's now changed the deadline today, and now at least ES was up about 1% or so on the day. So I think what we can consistently see throughout this year and probably until the end is there's going to be more volatility. I think there's going to be more opportunities than you're going to have in a Biden market, but it's also going to be a lot tougher to actually take advantage of those. You're going to have to be, ballsy. You're gonna have to hold a position quite well, and you're gonna probably have to suffer more volatility than you've had to in the previous couple of years. But the opportunity side of it is going to be crazy. I think, at least in my opinion. We'll see how it plays out if it will continue. But yeah, I agree on a general sentiment. If I had to say in 2 years, is Spy not going to be above like $600? I would place a bet that it will be. It'd be very crazy if it wasn't, at least in my opinion.
Yeah, I agree. Like, my idea was always that to implement. We talked about this on the podcast. To implement whatever you wanted to implement, you would have to come out of the fences swinging, like at the
Yeah.
start of his presidency. And because if you are going to do that, the later you delay that, like the tariff things and crashing the market, you're going to delay it into the midterms, and that's not very good. I don't think that's a very good strategic outlook. And but given that that's positioning that we can take, and that's what we talked about, I think if we expect bullish into 2026, that's good risk that we could take. And yeah, let's see if it plays out or not.
Yeah, I think one thing I'm just gonna have to do better this year is allocate actually more exposure. I was happy with the trade we did on Spy, but ultimately, as a percentage of net worth, I think I could have done bigger. So I'm gonna try and take bigger bets this year. Now, obviously, that could pay off really badly, but I want to at least try and increase it because I think for the most part I'm very risk averse by nature. I think I am only risk on if I'm trading badly most of the time. If I'm trading logical and sound, then most of the time I'm very risk averse, and I want to just slightly increase the amount of risk I put on kind of each trade on these positions, especially on the longer term ones. It's not like I'm taking a position, for the next 1 minute or anything. It'll be for the next
Yeah.
couple of weeks, etc. I think those are my main, at least, goal this year is to generally just increase size across the board. And then I think that's really about it for this year. Do you have any general like trading goals for this year, or?
Um, I I want to consolidate everything a bit better. I want to make my portfolios a little bit more. Um, uh, uh, I want to make them a little bit less volatile, let's say, because yeah, I've allowed a lot of volatility this past year. I've been kind of ignoring it because it's the hyperliquid trade, and it's for me it has been one in a lifetime opportunity, and I want to squeeze every bit I can from that trade. But after that's done and closed, and I'm ready to move on, I will do some deeper thinking about my portfolio.
Yeah, I think one change that I might do this year, I'm still not 100% sure on it, but probably later into this year, I'll want to become more swing based. I think a lot of, at least my future strategies, are quite intraday, which technically there's nothing wrong with. It's lower margins, so I can take on more leverage. I don't have to put as much in the account for it. I've got a couple swing strategies, but they take up a lot of margin overnight. You get exposed to other sort of risks as well. But ideally, in an ideal world, I would like to be in positions for weeks and maybe months. It's nice being out of position by end of day. You can't capture as much of a move on it. So I
Yeah.
would prefer to have fewer positions that are a bit more concentrated, but are swing based. Now, I think I'd want that to be across like all markets, though. I think I'd want something that's commodities, crypto, futures, equities, and that'll take a bit of time to build out. So maybe it won't be done this year, but I'm kind of slowly working up towards it. Already have some like models for crypto as well that I'm enjoying, and crypto I think has been a great way into it because you get great volatility, great opportunities, but it's often not intraday opportunities for the most part. Normally, you're holding most positions for at least a day, a couple of days, which has been a nice kind of lean in between compared to my futures kind of like automated trading.
Yeah. Yeah, I think, and it not only like we are not going to enter into a day trading versus swing trading debate, but I think it frees up a lot of your time as well. You just have to manage whatever open exposures are on, and you go on with your day.
Yeah, I agree. Well, like at least for me, because most of it's automated, I don't really think about it, especially because it's through NinjaTrader 8, which is pretty robust. But for me, it's really just been concentrated bets. Like I've been watching you and watching other traders. A lot of the time, those huge P&Ls you're going to get is from concentrated bets, like we were talking about previous episode. And I don't think I really have any exposure to that at the moment. So I kind of want to try and increase the exposure to it. Now, it may work horribly, but we'll see how it goes, and then we can see in a podcast from a year from now, and I could tell you, hey, it worked or it didn't. It'll be a good
Yeah.
way to kind of look back.
For example, yeah, both me and you, I think, have to get better at just buying when stuff is really low and selling when it's really high for those type of plays. For example, we had Moonpig yesterday. it declined from the $120 million market cap, and it declined to 45 million. I'm watching on my chart here. So we could have paid attention to that, and not only when it's going up a lot, and we should have bought that because it was this is like what a 60%, 70% drawdown almost in a few days, in a few hours. Sorry. So we should have looked at that and maybe take a position there. So taking positions when there's a lot more fear on the table and stuff like that. But yeah, I think that's where we will build our concentrated positions better.